It's not always easy to find stocks that have performed well that are also at relatively cheap values. I have nothing against growth stocks that have high PE, 60, 70, 80 plus, but it's not always what we're looking for. Diversification is good. You don't want to put all your chips in one basket. So today we're going to be looking at some tech stocks primarily. All these are tech stocks. All these companies are below the S&P 500 PE average, which is 30 right now. Yes, that's a bit high, but I guess this gives video more leeway, right? And also these stocks have all performed or outperformed the S&P 500 over the last 5 to 10 years-ish. So today we're going to be looking at Qualcomm first. I like Qualcomm. I own it personally. I think it's going to do well. It's also really cheap, 17.5 PE. So you're almost half of the value of the S&P 500. You've gone up 78%. S&P 500's up 90% over the last 5 years. So you're a little bit under, but once you factor in the dividend, 2.15% dividend, this stock has performed almost right on average right in line with the S&P 500. So it really is a relatively good deal. I think so. They also do semiconductor stuff. Actually, the first three companies we're going to be looking at are all semiconductor centric. Qualcomm does they're trying to get into the automotive industry. They do a lot of chips in Apple smartphones, things of that nature. They're also have some partnerships with Microsoft with some laptop chips as well. Not crazy on the AI field. They're doing some stuff. They say AI integration of laptops. It's really not there yet. So I think that's a little bit overblown. But Qualcomm is a solid company, a tech company, and they've produced good results over the last 5 years. Like I said, nothing crazy, but this is a pretty cheap tech stock. And then next we have AMAT. Over the last 5 years, it's doubled the S&P 500 performance. That's really good. It's also PE is under 20. So you're doubling S&P 500 and you're almost a third cheaper. Okay. Dividends a little bit smaller, but who cares about that? What does AMAT do? You might say, what the heck is this company? AMAT provides a lot of resources to TSM and Samsung, which are chip fabrications. You may say, why the heck do I care about TSM and Samsung? Well, they provide all the stuff that NVIDIA uses. Not all of it, but NVIDIA would not be able to do this stuff without the 3 nanometer technology, the cutting edge stuff. NVIDIA's AI chips would be not available. They wouldn't be anything. So AMAT is an important person in that supply chain. I also like ASML. I don't have enough to cover it in this video. ASML does similar stuff. They're also relatively cheap. However, their PE is still higher than S&P 500 average, so they aren't going to get covered in this. But I love AMAT long term. It's performed well as well since 2015, up from 25 to 170. Very good performing stock. And then we have AMD, the last semiconductor in this specific video. I like AMD a lot. This is a long-term hold. It's actually been one of the better performing companies since they were almost bankrupt almost exactly a decade ago. This has been a very, very, very well-performing stock since those lows. And it's really hard to compare before then, too, because they had a leadership change 10 years ago. That's also sometimes you have to be careful looking at the history of stocks because you could have an entire different history of leadership change, all that stuff. But anyways, you also might be saying PE ratio 110, that's not below 30. You would be correct. 110 is not below 30. However, there's some kind of funky stuff. You see forward PE is 25, so you're almost right at S&P 500 forward PE. And there's just some weird stuff going along with, they merged with a company, bought out a company, Zilnex, which does a lot of their embedded stuff now. And they're writing off debt with it, so the PE ratio is kind of really wonky. This is the one, AMD technically isn't below S&P 500 average. However, the growth they have in terms of revenue and in terms of earnings per share over the last decade, they have grown incredibly well. So the fact that they're anywhere near, their forward PEs anywhere near S&P 500 forward PE is saying that this is a relatively cheap stock considering the history of it. Now, yes, 1 year performance is not particularly great. See, it's down 10%, but that doesn't necessarily mean this is a terrible stock. I really don't. Like I said, if you see the long-term performance, it's been one of the better performing companies in the world. So I like, and also they do AI stuff. If you think they can even ship out 10, 15% of the market share from NVIDIA, they should do relatively well in the long term. Also, they have their finger in many different areas as well. I personally believe in leadership. That's why I like AMD, but we don't have too much time to get into too much detail. I think I mentioned if you are curious in any of these stocks, I cover all of them, most of them in a video. Maybe not like within the last month, but relatively similar. So relatively shortly ago. Over the last 5 years, Google, this is another one going into 190%, over doubling the performance, maybe a little bit less when you factor in the dividend, but Google is a cheaper stock. It's below S&P 500, 26. So you're doubling performance and you're cheaper. Google is one of the Mag 7s, one of the cheapest. Meta is another one that's cheap if you want to take a look at that. I feel like Google is a little undervalued. Maybe there's some hesitancy. Okay, is AI going to completely replace Google? They seem to be integrating. That's the word I'm looking for. Integrating AI into search more. I assume most of you notice that. You get the AI thing. Maybe even haven't even noticed that's what it is. They understand that if everyone can just type into a prompt and get whatever they need, Google understands that would threaten their business model, and they're trying to come up with stuff, and they're investing in AI heavily that they can be at the front of it. Now, of course, there is that risk. They get beaten out, whatever it may be. But I think in terms of, okay, this is a huge company, $2.4 trillion market cap. They have lots of money, hundreds of billions of dollars in cash. If you trust the leadership at all, right? If you trust the price at all, this is a relatively cheap buy that you can get in the tech area. It just is. And then lastly, this is probably the weirdest one. It's a much smaller company. I assume almost no one watching this video has heard of it or invested in it. I like it for a number of reasons. One thing you do have to note is it a much smaller market cap, and you do have to factor in smaller market caps is more risky. It just is. Less employees, easier. You could get away with fraud in a terrible case scenario, right? Just things like that. So smaller companies generally have, for the growth, they have lower PE ratios, but this is one that's done exceptionally well, basically 3x the S&P 500 over the last 3 years, and the PE ratio is 27. We are near an all-time high. I try to avoid all-time highs for most of these, but you're really not, you're not crazy high or crazy low. Last 5 years, 263%. If we zoom out further, going back a decade, 2015, you're up from 16 to 231. This is a stock that has done very, very, very well. They do a lot of mechanical stuff, optimizing, optical. I don't understand it 100%, but it's still an interesting business. I still need to research more on it because it's just kind of complicated. And there's a smaller-ish company, so there's not as much clear information. Like, obviously, everyone knows what Google. Most people know what AMD and Qualcomm. I can explain to you that. So it's just a company that kind of is harder to understand. But in terms of everything, in terms of PE ratio, in terms of market cap, in terms of performance, this is one of the better tech companies you can find. It really has performed very well. The chart looks really nice. But anyways, I think I've covered most of what I want to in this video. Like I said, if you enjoyed or you want to know more about any of these stocks, I covered individual videos, everything except Fabrinet. I think maybe I did. I don't remember. But I appreciate you all for watching. If you enjoyed, consider liking and subscribing. I do daily stock content on this channel. But I appreciate all of you for watching. I'll catch you next time.